Hello, you. Thank you for stopping by. This is Moof at Stock Attacks, and today I'm going to be answering probably the most common question that I get related to taxes and stocks, and that is how much should I expect to put aside for income taxes on my capital gains? And today we're going to be speaking specifically of short-term capital gains, that is to say assets that you have held for 1 year or less, equity, stocks that you've purchased, whether it's on Webull, Robinhood, TD Ameritrade, E-Trade, doesn't matter where you're trading them. If they are in a brokerage account and they are short term, you are a day trader or a swing trader or even a somewhat long-term trader, you're just not holding for more than a year. So if that is your question, stick around, and that's what we're going to be talking about. Once again, this is Moof at Stock Attacks, and let's get to answering that question. So I did tell you in the intro that this is definitely for short-term capital gains, but there's something else you're going to want to be aware of. This is for United States tax code. This is not Canadian. This is no other countries. I will have a video for Canada down the road, and it's also for the federal tax code. This is for the Internal Revenue Service. This is not for your specific state. Again, future video is going to have all the states, but this one is specifically about short-term capital gains for the federal tax. As I said, I get this question more times than you can imagine on Discord, well, pretty much everywhere, including text, phone, my clients walking through my door asking this question. But I'll just take this one from Discord that I received just a couple days ago. All right, let's see what we got. Okay, so this question comes from Zsoo, Z-S-O-O. Well, Zsoo says, hello all, still confused on tax. Let's say I bought stock A for $1,000 and sold at $6,000. Then I bought stock B at $5,000 and sold at $1,000. My net benefit is $5,000, correct, 6 minus 1, minus $4,000, correct, $5,000 minus 1. As a loss, $4,000 equals $1,000 in profit. Do I pay tax on $5,000 or $1,000? Or do I claim my loss for $3,000? Hence, I will be paying tax for $2,000. Now, what I really like about this question is it touches on all the different things that we have to talk about. For the less acquainted, you're going to say, well, what's this $3,000 that he's throwing at the end? And that's a very important number because that is a capital loss limitation. But most people interpret the capital loss limitation incorrectly. But I guess the short version is, the answer is you're going to pay tax on $1,000. In this case, that's it. Now, it doesn't mean you just put the number 1,000 on your tax and away you go. You have to list every transaction. So if this person has 2 transactions for the whole year, each transaction gets listed, date, quantity of shares, equity name, the name of the company, the date you purchased it, the date you sold it, how much you bought it for, and how much you sold it for. And of course, that will yield then the profit or loss from that particular trade. Now, down the road, we'll get into which way, if you bought them at different times, how do you figure all that out? What are the different methods available? But at least for this, taking this very simple example, the answer is correct. You pay tax on $1,000. We'll get to how much that is, but let's talk about why these other numbers would have come up. Some people believe that you pay tax only on your gains and you don't get to write off your losses. Thankfully, that is not the case. So in this case, no, you don't have to pay tax on $5,000. You get the benefit of taking the loss against the gain. Now, why the $3,000? Why does this person, in the process of having this discussion, say, or do I claim my loss for $3,000, hence I will be paying for $2,000? The reason why they bring that up is because of this capital loss limitation. But that capital loss limitation is done annually. So if you take all of your transactions for the entire year, then you take all of your losses for the entire year and combine them, you're going to arrive at a number. If that number is positive, you will pay tax. If that number is negative, you will get a tax benefit that you can write off that number against your other income. But that number is limited to $3,000. Where does this number come from? It's in tax code. I've been a tax accountant for longer than I'd like to admit, years, and it's always been 3,000. Now, what if you have a $10,000 loss after you figured everything out? Well, you get to take 3,000 now, and you get a $7,000 capital loss carry forward. You get to bring it to the next year. Now, what if that next year you have no stock transactions? So you got that 7,000. You're allowed to take 3,000 again for it. So you took 3,000 the first year. You've knocked that 10 down to 7. Now you take 7 into the second year, take another 3. You're left with what? You're left with 4. After that, after that year, now you have your capital loss carry forward, and just let's take it to its natural end. Eventually, you'll have your final year in which you can deduct $1,000 of that remaining capital loss carry forward. What happens if you have a gain the next year? Can you still take that 3,000? Absolutely. But you're not limited to the 3,000. You're limited to the amount of your gains plus $3,000. So let's take the same scenario. You have a $10,000 capital loss. You take $3,000 in the first year. You're left with 7. But now let's say you have a great year, and that $7,000 in the next year, let's say you're doing taxes for 2021, you had a $20,000 gain. You had a fantastic year, $20,000 gain. Now, based on your rudimentary understanding of it, you may say, oh, bummer, I can only take 3,000 against it. Not true. You can take the full 7,000 against it. Your only limit is that each year you can't exceed the $3,000 loss on your taxes. So once everything is done, you have to have a gain or something above a $3,000 loss, and anything beyond that $3,000 loss, you will carry forward. Now we'll take maybe one last scenario. Let's say that you have that $7,000 capital loss carry forward, and you just have an abysmal following year. You lose $4,000. Well, let's say you gain 10,000, you lose 14, so you have a total capital loss of $4,000. What do you do then? You're still limited to the 3. So I don't think it's going to be a surprise to anybody that if we say what happens then, you have your $7,000 loss that you took with you into 2021. You had $14,000 gain, $10,000 loss. You had another $4,000 loss that you got to tack on top of this. So now you have your 7 plus 4. You have 11,000 in losses, of which you're allowed to write off how much? That's right, 3. So 11 minus 3 is 8. So now your $8,000 you carry forward into the next year, 2022. Okay, so now you understand how you figure how much your capital gains or losses for any year and how much you're allowed to deduct. So now we did all of that just to answer the first part of the question, which is, how much do I have to pay tax on? We haven't yet covered what that tax amount is, and that's probably the most important question. But that is definitely for the next video, which I'm going to try my best to get uploaded right alongside of this one. In fact, I think it's going to have to be in 3 parts. It's going to be this part, which explains how to figure out how much you have. The second part, which is how to figure out how much tax you have to pay on it, your rate. And the third part, to understand what taxable income is in the first place, which is more complicated than you think. So I hope that first bit was helpful to you. Jump right over to the next video, and we will continue from there. Thanks for stopping by. Once again, this is Moof at Stock Attacks. Have a good one. Don't hit your microphones.